Yo, testing, testing. Can you all hear me? Good morning, good evening. Great. It's good to see you, Mr. Fish, as always, with your top hat. Mr. Fish and his top hat and his little gif, always giving that little bow. Benedict Cumberbatch, right? I think that's his name. Benedict Cumberbatch. For those that are joining, welcome, welcome. Make sure to hit that like button, subscribe to the channel if you haven't already. Give that like if you want to get this live stream started and up ASAP. ASAP. Let's do it. Welcome, welcome. Gonna do a quick mic test. Can you guys type yes in the chat if you guys can hear me loud and clear? Fantastic. Fantastico. Yo, what's going on? If you're just hopping in, make sure to hit that like button. If If you want to get this live stream started, I think it's going to be a slow day. I don't know. I haven't done a live stream at this time. It's my morning. Got to do it before the day starts. Subscribe to the channel if you're new here. Welcome. If you guys have any questions, please feel free to ask them in the question or the chat section. If you have any questions, yo. No questions? You guys just lurking? You guys just watching this in the shower while you eat? What are you doing, man? Are my friends here? Are my enemies? I know there's a lot of enemies in this X sphere. The crypto community is divided more than ever. That is a fact. There's a lot of fights happening. There's a lot of people who are not sure where the price is going. So I think a lot of people are going insane because of the price action, right? But in times of hardships, especially during these types of price action, has always ended in great moves to the upside. When everyone is bearish, that's not when the bear market happened. The bear markets, they happen unexpectedly, and this is not one of those times. But then again, there is the opposing argument where, you know, we've been in a bull market for the past 4 years, right? And it just goes to show who's been reluctantly following their own philosophy of taking profits, right? You know, I've been taking profits myself. You guys know this, right? You guys have seen my public ideas, my public shares of buys and sells, and my overall sentiment. I still think there's juice left in the tank. I think there's a lot of juice left in the tank. I think there's just small pullback. I mean, if you look at the previous pullbacks, right? You know, 34%. Got a pullback from how big of a pullback was this? 28, 30%. Another 26% here. This would be the biggest pullback if it did start to move down as a 50% move, and that would be the bear market in itself, right? But I'm going to explain why there's a lot of inconsistencies with the bear market scenario with the current data, that is. But that doesn't go to say I believe in cycles, man. I believe in cycles. I do think that there is going to be a bear market. And at that time, when I do call for a bear market, a lot of people are not going to believe me. There's, you know, I don't play both sides, man. I'm not a perma bull. I'm not a perma bear. I just follow the trends and we follow the validations and invalidations. But more importantly, we don't create 15,000 different scenarios that a lot of people do. You know, there's a lot of perma bears out there too, and I don't agree with them either, and I don't agree with the perma bulls. So it's very fun to be navigating this through all the mist of chaos that's happening in the crypto sphere or X sphere or Twitter sphere, whatever you want to call it. But yeah, to take the time to reflect on, you know, what's happening, because you are the key. You are the key to the portfolio, your own portfolio. No one's going to save you. No one's going to tell you, you know, whoever's telling you that Bitcoin's going to $1 million or going to $0. All of that is noise. If you don't execute it yourself, I'm sorry, man. I'm sorry. Because it's just going to be a rinse and repeat forever and ever. And the only enemy is yourself within this game. Be careful. Because if you don't understand your own way of navigating the markets, no one's going to save you, man. Someone can tell you the exact ways on how to, you know, the price is going to be moving up or down. But if you're not taking the action, man, you're screwed. You're screwed. And I just love the hate on X. I love it. It feeds my humility. You know, if we go back to my XRP analysis back in 2024, 2023, and 2024, where I was expecting a massive move to the upside, no one believed that. But it's okay. It's absolutely okay. And then, you know, we had a time where I spent accumulating and then I sold half of those profits. I converted it to profits, man. Converted it to profits, and ooh, a lot of people hated me. If you're expecting $5 to $10, why did you take some profits? So you can never be right, essentially, according to Twitter, right? According to X. And I just love that. I feed on that to feed the humility, and it's it's like a reflection of just how the markets work, really. You take profits, you're public enemy number one. You call for higher targets, you're public enemy number one. Call for lower targets, you're public enemy number one. But just know, I don't work with anyone on this platform. I don't collaborate it with anyone. I don't need verification from anyone. I don't, you know, I get hate from both sides, and that's just the beauty and nature of this entire system, basically, in the matrix, right? But what can you do? And that's why it all boils down to you as an individual. Because you're just the man behind the screen. And whoever hates on you taking profits, whoever is telling you to do this and that with the markets, man, with your own portfolio, don't listen to them. Only listen to yourself. But who am I? I'm just a random dude on the internet sharing my EW analysis. Once again, just a small little intermission. Please make sure to hit that like button, subscribe to the channel. We'll get this analysis started ASAP. It's been 15 minutes, man. Come on, where is everyone? Get it started, brothers. Hit that like button. We're going to start soon. We got 30 more likes to go. If you guys got any questions, just put them into the chat section, put the engagement higher, man, and this live stream will be very useful because I don't do these live streams as much anymore. So going back to the philosophy of, just risk management, you got to have a balance, right? You got to have a real true balance of risk management because you don't want to be a prisoner of your own analysis as well. And I'm just sitting here like I'm happy. Like it's just I'm happy, because if you took some profits, you're actually patting yourself on the back at the same time, right? And I think a lot of people, these influencers who are, talking about doomsday scenarios or even extreme, like insane bullish scenarios. I mean, you have to find a middle ground, because none of those extreme targets are going to play out. And these waves, that's why the Elliott wave theory, it filters out all of the emotions, right? And then there's a problem within the EW community itself. I think the EW community is more divided than ever. People get pissed off at each other as well. And it's very fun to watch. It's very, very fun to watch. Yeah, I mean, put your money where your mouth is, man. If you think XRP or Bitcoin is going to zero, then, dude, you have every right to short the markets, really. And if you think Bitcoin is going to $5 million this cycle, then you have every right to long it. Go full long if you want, right? It's a zero-sum game. This market is a zero-sum game. It's with every winner, there's another loser that's happening. And I'm guarantee you right now, 50% of you in here, more than that, 90%, are probably holding losing bags right now. Probably holding a lot of losing bags. And, that's also another testimony to my own approach to the crypto markets. Just choose the coins that have been accumulating. Adaptability is the biggest part here, right? Understanding how markets change in the next cycle, understanding from hindsight what has happened, and then applying the current data to the past and what's going to possibly happen in the future. Because not every bull market and a bear market is going to be the same, right? Also, the same thing applies. Past, price action is not indicative of future price action. It can definitely rhyme, and I think that's still the case. But my thesis and approach to this entire market is, you can see this is why I like to very, very much so, like, zoom out and talk about what happens. But people don't like the weekly time frames, People don't like how, when the markets are slow, they hate it. Right? They want fast, up and down. And, sometimes we just need a breather. And I think this is one of those breathers. So we will go over everything and, talk about why this might be happening, why this account might be happening. Whether you agree or not, that's completely up to you, and that's absolutely fine. Once again, those that are just joining, make sure to hit that like button, subscribe to the channel. We'll get this live stream up and running very soon. Sorry, I was just burping. But if you do have any questions and you're just joining, write them in the comments section right now in the chat so that I can go over them. So, yeah, do you guys understand what I'm trying to say? It's kind of like a little journal here. I'm reflecting on my past mistakes. I'm reflecting on the frustration that a lot of you portray on X. There's a lot of different categories of, what do you call it? Types of traders and investors in this market. This could be your 5th time in the crypto markets for this cycle, and you could still be losing because you still haven't fixed your past mistakes, right? Meaning, there's probably people here since 2018 where they, front ran their gains, they lost all of their gains, and then with whatever money that they had left, everyone's a genius in a bull market. They probably made a lot of money on paper, didn't take profits, and then, probably DCA'd near the top. And then, another pullback happened and lost all their money then. And it's probably a rinse and repeat for the 3rd time for you. Who knows? Raise your hand if that's you. If you're honest yourself and, you know, that you are a victim of your own self, it's okay. If you're honest to yourself, that's the first biggest step towards conquering the next step. Okay? Meaning there's still a lot of cycles to go through, but time is ticking. I'm telling you right now, time is ticking. If you did make it, then your next step is humility. You know, you got to be humble. You got to learn how to secure your profits. You know, that's an entire different category of risk management as well. And learning that, you know, maybe in hindsight, you know, you have to apply what has happened in hindsight to your future self, you know, understanding, applying the wisdom that you've learned and what you've done right, what you've done wrong, and then applying that to the next cycle, right? Because the risk gets higher and higher as price goes up. Anyways, I sound like a broken record player. Hopefully I'm not hitting a nerve on you guys but you know, I'm probably speaking the truth, right? To many of you that are listening right now. Am I right or wrong? Write it in the chat, man. I mean, write it down, dude. Like, if you're feeling lonely out there, I'm sure there's a lot of other people out there feeling the same exact thing. You know, even in this current bull cycle, there was a crap ton of money being made, but there's a lot of people who, you know, there's a difference between making it and surviving it as well. You know, part of the survival aspect of it is taking profits, you know, in this current cycle. You've had 4 years to, you know, take some profits at least off the table, right? And I'm not saying this as financial advice whatsoever. I'm just saying it's, you know, you got to apply the right amount of dignity, the ambition, and, you know, dedication of your investing strategies in the markets. And sometimes the only missing piece of ingredient is being patient. And then, you know, you have the people who are permabulls as well. Like, oh, you know, the market's already down 90% on a lot of coins, and they're still saying that it's going to go up. Like, those people are also a joke as well. Zero accountability, right? It's finally going to go up. It's finally going to go up. You have those people as well. And then you have the fear-mongering bear market people who are saying, finally, we're going into bear market. Those people are just as bad as well because, dang, dude, we're up, you know, this much. Since $15,000, we hit 100,000. Like, if you're not satisfied with that, and like these bears got clobbered along the way up with each range. Is this the third time that they're going to get clobbered? Maybe. Hit that like button, ladies and gentlemen. If you're new here, if you're just joining, make sure to hit that like button. We're going to get this live stream started ASAP. It's been 20 minutes now into the live stream, and we haven't even started the analysis, and I'm going to do it real quick. And I have a timer running. We're 24 minutes in, 25 minutes in now. But I am giving some free tidbits on how this live stream, during this beginning monologue intro. We need 14 more likes, and we'll start it. Verby Trade says, I feel like a lot of people gave up on crypto. I mean, give up on this 26% pullback? Yeah, you deserve, like the people who think that this is the end, they deserve to be flushed out. Deserve to be flushed out. How'd you guys survive this over here? How'd you guys survive with this? Even if we go up, even if we do go up an astronomical level up to, you know, $300,000, $500,000 per Bitcoin, highly doubt people are going to take profits anyways. Highly doubt it. Spiros, what's going on, man? My #1 fan. Are you still here, man? Are you listening? The markets are dead if you really think about it. Ah, what the hell? I'll just start it right now. It's been 30 minutes or so. All right, ladies and gentlemen, let's get this started. I'll just do it right now. Merry Christmas. All right, if you're just joining, thank you very much. We don't do these live streams often, but I am going to go over the markets very quickly. We have about 30 minutes left, and 30 minutes, it flies, man. So let's do it. So in this analysis, we're going to just do a quick top-down analysis, meaning we're going to start with the macro, and then we're going to do a bottom-up analysis and how to connect all the dots properly from the context of using the Elliott wave theory. We're going to talk about all of the local time frames. We're not going to go into too detailed. The micro time frame counts is being shared on the Discord membership and on the Patreon membership. So if you are interested in joining, please don't hesitate to use any of the links in the description below. That being said, let's get this started. Actually, where do we start? That's the biggest question. But if we start on the macro here, there's a few ways that we can be looking at the entire history of Bitcoin when it comes to making sure that we can navigate it using the Elliott wave theory. Now, remember, the Elliott wave theory is just a function of 5s and 3s, right? That's it. And they're all nested, and they all intertwine with each other on the local and the higher time frames. But the higher the time frame, the more accurate it is, but the longer it takes, right? And right now, if you look at it, again, 5s have I don't want to sound like a broken record player. I already did a public analysis on this. But in my opinion, the most important note is that you either have your 5th wave labeled here, or you have your 5th wave labeled here, which is going to be a possible ending diagonal scenario. And I'm going to talk about why this scenario is not the case where I see a lot of people DMing me about, oh, is this a ending diagonal here? I don't think it is. And I have pretty good evidence on why it's not. And I think that's where a lot of people lack in this space, which is evidence-based approach. And you don't have that neutrality. You need to balance out your scenarios and take out the entire bias of why we're in what you're talking about. Like, why you think that there is really going to be a major bear market scenario, which is now. This intermediate degree could be in, right? Now, we'll go over this in just a second, so stick around if you really want to know why I don't think that the bear market is happening, okay? So the #1 thing is just using the past 15 years of data, right? We have 15 years of data, so we can split everything in 5s and 3s. But the biggest thing is this move up that we had here, there is a very clear 5-wave structure here. And I think it's pretty evident and objectively clear that we could label this move here as a top because it finishes easier and better as a 5-wave structure here, okay? That is why I think the termination point is labeled here from an intermediate degree perspective, since we do have a super cycle, and primary, and since we do have higher degrees of 3s, and usually I like to work in hierarchies of 3s, I think that now that we're in the 4th hierarchy of a lower degree, it's pretty safe to assume that, again, we could be finally working in the super cycle, or at least the cycle degree, and the primary degree extensions now, meaning that we are now cleaning up everything and we're working for the 3, 4, 5s, where if we also take the characteristic of what's been happening for the past several years, where bear markets are getting shorter and also elongated in time, that also coincides with the market maturity theory, where the markets are getting smarter and more people understand TA, or technical analysis, more people understand that how crypto has worked in the past, but they don't want it to work in that way. So in that regard, this might be one of those theories that might be coming to fruition, where we're going to have a sideways structure now for this wave 1, 2, and then we follow suit for 3, 4, 5s. So that's just the basis of this overall entire scenario. It's a thesis in working. But again, I think a lot of people are working towards this idea where if you're in a bearish perspective, that the top is now finally in, where we're now having a larger ABC to the downside. Okay. So first things first, let's talk about why this scenario is not likely the case. So we can start zooming in and talking about why the bearish case is not likely the case, even though it looks like an ending diagonal, okay? First of all, there's a very big inefficiency here, which is this move here. An ending diagonal requires threes, basically. All threes to be happening. It's a clear hard rule. You need every single wave to be 3 waves for an ending diagonal, okay? If we're identifying this as an ending diagonal, this move here is definitely a resemblance of a impulse structure, okay? Maybe if we didn't create another double top, that could have been here as the termination point. Maybe that could have been the ending diagonal, but still, that's pushing it. It's very clear that this was an impulse to the upside. It's very clear, right? So objectively, I think labeling this as some kind of A, B, C to the upside, I mean, even if you're just using trend-based Fibonacci extensions, I mean, how far is that going? Is probably even surpassing the 3.618. Oh, no, okay, so it didn't surpass that, but still, if you're having a C wave that's extending to the 2.618 and beyond that at least, then you know that's not a C wave. On the macro, that is. So, there's times where C waves can extend that far, and that's probably the only resorted scenario where you have to label that as an ABC wave, right? But that's in hindsight. And the most important thing is, even in hindsight, it doesn't seem resemblance of what is, a 3-wave move to the upside. Now, this move here, I think a lot of people are also having trouble counting this as well. We can count an ABC to the downside. I think that is the normal case here, so that's absolutely possible. This move here can be counted as 3-wave, 3-wave, 3-wave. So there's nothing wrong with that. Now, the follow-up is also a problem here, right? This move here. It's the follow-up. You need a strong impulse to the downside, right? We're now getting distribution to the downside, right? So if we zoom in and also use this and try to find some evidence-based approach on why this is not the case, this here was a 3-wave structure, and then we now follow it up with distribution. Now, distribution is more real resemblance of a characteristic of a 3-wave structure, right? But the problem is, I think a lot of people are counting this as a wave 1, 2, 3, and then counting this as a potential 4, and then a 5 here. Now, there's nothing, first of all, we can clear this out and say that it is still valid if it is a 5-wave structure to the downside. But if you're using and utilizing the proper guidelines of what is a high probability scenario and not a high probability scenario, there is a problem with this one, because this wave 4, just using common sense, I mean, this is just the basic guidelines of the timing aspect ratio of how the right look, quote unquote, from the Elliott wave theory should be playing out. This wave 3 is like 4 times longer than this wave 2. So you have to rule that out from otherwise you're now working in bias territory. That may be valid, but it is working towards a bias of being bearish. And that's one bad thing that you want to do when you're using the context of everything else, the surrounding waves, right? So if this is a wave 1, 2, 3, 4, you're betting on this wave 4 being way larger in time against this wave 2, and you're now working for a 5th wave, okay? So that's one. Now, if you are a little bit versed in the Elliott wave theory and you want to say that, okay, sure, we can say that this was an ABC to the downside and we may be working in a WXY scenario, right? That can help us push us down into a more reliable separation of degrees. So if you're saying that this is an ABC, and then you can say that this is a wave W, and then say that this is a wave X, congratulations, great job. You're utilizing the Elliott wave theory on the local time frames, but now you're having trouble on if this is turning into another 3-wave move. You don't have the depth of what is a potential bear market with a higher degree wave 1, 2, right? So if you have a WXY and that is your argument that you're finally, you leveled up in your Elliott wave theory skills, that you have a WXY to the downside, you now have to fight against what is going to be a potential 200 moving simple moving average on the weekly time frame that has never been breached, sustained, that is, a sustained breach. the depth of the WXY scenario only goes about this far, right? If you're using equality of how the waves turn out, right? So if you zoom out on the weekly time frame, do you want a wave 1-2 that is this small and then we move up? Sure, that's possible. But again, you're working in a biased scenario because you're also going against the fact that this was such a large move to the upside as an impulse, and you're now just betting on the small severity of a pullback if you're seeing a bear market scenario. So that is the proper approach, in my opinion, on why. And I do want to believe it. I do want to believe that we're going in a bear market. It would be absolutely fantastic for me. If I wanted to, if I had all the right green flags of what a bear market is going to be happening now, why not? But I don't have that right now, and that's the problem, right? I wish I can say that we're going into a bear market because trust me, I want a bear market so bad so I can accumulate more Bitcoin, right? So bad. But we don't have the depth, in my opinion. We just do not have the depth. And although the other opposing side is, yes, from a timing perspective, after the halving has happened, there is no better time to do a bear market now. But we don't have the proper data, especially with the two local, I don't want to even say it's local anymore, inefficiencies of this being an impulse to the upside and this being a corrective three-wave structure. The bears also have lost their chance to continue it as a impulse to the downside. The only hopium that you have is you're now betting against the idea of this being a large wave 4 against this wave 2. When it's clearly a distribution with a ABC connector as a wave W, and now this is a connector wave as an X, and then you're now looking for a connector wave to the downside as a wave Y. So how do we combat this? This is not enough for a bear market, but it's also the best way to separate the wave counts, where it's not part of this entire range as a potential triangle, because the triangle also does portray some problems, right? This here, a lot of people are not going to agree. And I think I'm one of the first people to actually call this as a WXY scenario. I have been against all WXY scenarios as a sideways combination, but I can guarantee you that I'm the first person to actually possibly talk about this. So that being said, how do we combat this? How do we use both sides of this story where, yeah, maybe there might be a shorter time frame, deeper pullback, but how would that fit into the larger time frame of making sure it's all established and organized? That, ladies and gentlemen, leads into a new scenario of what is known as the ending diagonal on a larger caliber scale, which is this. Our cycle wave 3 is here. The COVID crash or the pandemic crash that we had is now labeled as distribution of a wave 4. We have an ABC to the upside here for a wave 1 that leads us into the first subwave of a wave 1. We have a WXY going into wave 2 here. We have a WXY going into wave 3. Now it is established correctly. We have the proper elongated move. We're utilizing this entire range to the upside, not as an impulse now, but finally as a three-wave corrective structure, and that's now labeled as a top. So this is going to be in agreement with the bears now, right? So I'm satisfying both sides of the story here, where at the same time, I'm also satisfying everything from an LA wave perspective in order to make sure we combat the inefficiencies of how everything's playing out from a context perspective. So if we're now having this as a three-wave structure, as a wave A, B, C into a wave W, where that did look better objectively, and this is now objectively looking better as a wave X, we now have the depth requirement of this going into a wave Y, which goes also meeting into that 200 simple moving average of the weekly time frame that we have here. Because if we pull up the weekly 200 simple moving average, you can see it's now going to converge at that level over here. Bada bing, bada boom. We have the depth requirement of a WXY. At the same time, we're satisfying that there is going to be support on the 200 moving average of the simple moving average, that is, where it has traditionally always been supported 100% of the time. Even if it meant a small distribution zone right below the 200 moving average, there hasn't been a single time where the 200 simple moving average has been breached on the weekly time frame. So if this WXY scenario happens, boom. Now we can satisfy everything that has happened in the past from a hindsight perspective as well. So we're now using all the termination points here as an ending diagonal scenario. Now we can have a WXY that satisfies and meets everything from a local time frame perspective, and also from a larger macro perspective that the 200 simple moving average is going to be supported, because that is our biggest evidence. And then we have another three-way move to the upside. So what does this mean? What does this do for the current investors that are in the market? What if you're exposed in this market? Now, this is great news, right? Because we're expecting another move to the upside. This here, ladies and gentlemen, in my opinion, is going to be the major trend line, where if we do get a three-way move as a WXY to the downside, and we do get another rounded distribution to the upside in the form of a wave A or a variant of that as a wave W, then I know that the bear market is going to be happening eventually sooner than later. Okay? And that should complete off our ending diagonal, where this entire range after the COVID crash is now just a jokester move of just having everything as labeled as three-wave structures. And that, in my opinion, is where exit liquidity is going to be the biggest in this entire history of Bitcoin, where we could finally have a major collective sell-off where every institution, every retail trader is going to have a cascading domino effect, and that's going to lead us into the first largest bear market that might happen. And that, in my opinion, if we're just utilizing the Elliott wave theory once again, we should retrace the entirety of this diagonal, or the majority of it. And that is why we're looking for at least the biggest support to happen around $16,000 or $17,000 per Bitcoin. Then we'll have another major bounce, and then that will be the B wave. And then we go into another multi-year bear market that should complete off the C wave. And if we're looking at it from, and you know, we're not even assuming the Fibonacci levels at this point, we should theoretically be going back into the 4-digit Bitcoin. Now, what's the beauty of this, you say? There is a lot of opportunity if we do go down to these levels. It's the first time in history, where the super rainbow RSI indicator that you're using is now failing on you. And now the real rainbow starts, where we have an ABC to the downside, and it's now curving to the downside. That, ladies and gentlemen, is how you create a thesis and a proper way of creating high probable scenarios on how these are playing out. Okay? So in my opinion, I would say, in fact, this is the higher probable scenario, in my opinion, using the market psychology of everything as well, using all of the frustration that's happening in the markets for the past years, because ending diagonals is an imbalance between the bulls and the bears. That's what's happening. That's the imbalance of what we're seeing for the past 4 years, where we fail to continue to create an impulse to the upside, where we fail to continue to create new lower lows to the downside. That is how this ending diagonal scenario could come into play. And that is why I'm here to share to you, everyone, that this is the first of its kind, in my opinion, on how I think this could be an alternative approach to Bitcoin's cycle. But there's good and bad news to it. The good news, we just talked about the bad news, that it could lead us down to a 4-digit Bitcoin. But the good news is there's another exit opportunity for you to get out of this entire market and just play the waiting game for the next 5, 7, 10, 8 years, which is Bitcoin can finally do a retest of up to that trend line, at least, which is going to be around the $160,000 levels. And boom, that is the end of the entire bull market. Not only the entire bull market this season, but the entire bull market. Now, the bears are salivating over this scenario, but the bulls are also salivating over this scenario because, there's finally an opportunity to get out of Bitcoin at these higher levels. Now, does this sound approachable, and does it sound balanced? When I'm looking in the mirror, I absolutely think so. I think this is an absolutely balanced scenario. Absolutely. And you know what the Elliott wave theory is built upon, right? It's just a simple 5-wave structure to the upside. And now it's being satisfied, right? It's now being completely satisfied. But the very interesting is, this also looks very enticing as well, because it follows the idea of fractals. But again, from an Elliott wave perspective, it sucks. It sucks in many ways because look at this. How many 1-2s are we going to be creating? Even the bearish scenario has its problems. 1-2, 1-2, 1-2, 1-2 again? How is this going to never end? It means that Bitcoin is going to go up forever, up to, $20-30 million per Bitcoin. Now, is that something that you want to happen? I do, but it's definitely not the highest probable scenario at this current stage. But this here is a little bit more in line and in stream with understanding the shorter time frame bear market pullbacks, and also finally concluding the first 3 hierarchy degrees of higher degrees, and we're now working in the 3, 4, 5s to the upside, finally working for the cycle, super cycle, and then it's over. Okay? So whichever route you take, this I think is becoming one of my primary scenarios very, very soon. It just depends on if we break market structure of this level over here. It'd be the first time in history that we broke a level of this all-time high and coming back into a median range and trading on it. But the reason why I have to go with this idea here and with also this idea in mind is because of the 200 simple moving average. Okay? So with that being said, why am I seeing a potential sideways triangle here? Now, that is a big question, right? That many of you are asking. Now, again, I'm going to do a little infomercial here. If you guys are just tuning in, thank you very much. Please make sure to hit that like button, subscribe to the channel. We do a lot of coverage here on the LA wave theory and also more specifically on the cryptocurrency markets. And again, if you are interested in seeing the more local time frame updates, please don't hesitate to reach out for the Discord membership. We've been operating that since 2018. We have just about 1,300 members in there and counting. We also do have a Patreon membership for those that want a more easily digestible approach to how I am sharing content here on YouTube. So going back to this, why am I seeing a WXY structure here? Well, it is really the only way we can count it. I mean, there's a lot of people who can count very well up to this point. There's a lot of people who can count up to this point very well, but they don't know how to use the context of the larger time frames to overall count it. So in my opinion, again, if we're using the context of what's happened, again, we have a 1, 2, 3, 4, 5. That's our main context or basis of root, that this is the main termination point. If your main termination point is over here, then you're now definitely working in a WXY scenario. But for me, I don't like that. I like to work with a higher termination point being labeled here because the 5-way distributes and ends here a lot more better, right? So if that's the case and we have a WXY here, we have a 5-wave move into a wave A, we have a triangle for wave B and a wave C. We need a 3-wave structure, at least a zigzag structure going into a wave W. Fantastic, that has been met, all right? And then we have an A, we have a triangle for wave B here, so this would be an A, this would be a B, and then we have a C wave that's completed here. Not uncommon within the crypto markets. It's very common. It's a long wave A and a short wave C. We've seen those happen time after time, and especially in the past year or so. So this would be completing off our wave X. Now, how do we finish off? Well, first of all, let's talk about what we originally assumed, which is a potential flat idea. This could have been a flat idea. In fact, it would have been better if we flushed out the markets and broke market structure earlier and just said that this was working in a larger ABC to the downside. But we didn't get that. This does not look like a 5-wave structure for a wave C. Okay, we've already discussed that. So what does that mean? We are now left with one potential option, which is a triangle idea, and it's also starting to come to fruition. If we go back to my analysis, we've been talking about this since December and previously as well. We've been talking about a potential ABC to the upside and talking about how this is going to be ending anywhere between the 100% and the 161%, and even major resistance around the 61.8% that we didn't get quite to reach. So now our trend line is established and we have a 3-way structure here. Do you guys see where I'm going with this? The context of everything has to be utilized properly, okay? So since the first structure here was a zigzag, this can't be a zigzag in itself. And I think a lot of people are saying that this wave Y can end here because this is also an ABC structure, right? And maybe this is a distribution for a wave 1, 2, 3, 4, 5. No, you can't have that because there are rules and guidelines for a sideways combination as well. A WXY sideways combination, if you have your first leg as a zigzag, your wave Y can't be a zigzag as well, even though wave X can be any corrective structure. So in this case, this is labeled as a triangle structure, and wave X is also labeled as a ABC to the upside. So now it fulfills the rules and guidelines. But interestingly enough, the reason why I am deep diving into this idea and why this is becoming a little bit of a higher probability is because it's not only range bound, but it's also characteristic of what's happening. I think a lot of people are losing hope within such a small range. I mean, just look at the sentiment within the current chat. There's a lot of people saying, oh, it's the end of the world. It's, Bitcoin is going to zero. And then you have still the long living bulls that are still thinking that it's going to be saved. And that's what creates the characteristic of an equilibrium. We've had a major low, we've had a major high, and we're now creating more of a distribution. And that's the key point of how these WXY scenario sideways structures play out. So that being said, the only way, if we're going to use the context of what has happened here as an ABC, this would be leading us into the first wave A. This move here as an ABC to the upside as a B. This here as a C. We do have a protected low, 2 protected lows. Boom, D, E. That, in my opinion, ladies and gentlemen, is now properly doing it from a top-down analysis and a bottom-up analysis, because I've already explained how the bottom-up analysis is also playing out on my public analysis here on X. I've already given my wave counts and my evidence on how this ABC has played out. We had an A as a leading diagonal, we had a WXYXZ as a B wave, and we had a ending expanding diagonal for a wave C that ended at the 100% level. So we're now going for a smaller pullback right now. We got that impulse move to the downside, which is what we're also expecting, right? So that's how we're looking at it, ladies and gentlemen, at least in the current time of things. Until things proven otherwise, we have to remain with the bullish scenario as well. And this is the best way I can give a bullish scenario. Now, I'm not saying it's the absolute best scenario, but I'm saying it's the best balanced approach when we're using the context of every single surrounding wave, right? So it's either that or you believe in the WXY scenario, which is come down and retest $63,000 and then we move up. And that being said, I absolutely do not believe we are in a multi-year bear market at this current stage, even though we do have the proper timing, context, and everything being met, right? It looks really nice from a timing perspective that we should be going for a pullback now if we use it. But that has happened after every single cycle like this. Looks great, but that's about it. And the same thing applies for an ending diagonal. It looks great, but that's it. You're forcing yourself quite a bit, and that's the least things you want to do with an ending diagonal, is to assume that an impulse is in play. So let's get into some of the questions. It's a pretty dead chat today, which is fine. I think crypto markets have really given a lot of people some time to touch some grass, right? Let's see. A lot of bearish signs on the 1 day, EMA 200 loss and channel rejection. Also pitchfork, looks clear that we made downtrend. Do you not agree, and why? If not, if so? So basically I just answered your entire question basically, right? Number one, your 200 EMA, you want to use a 200 simple moving average because it is calculated. It's a static moving average. More importantly, the general markets use the simple moving average. So it's very important that you have to understand it from a general perspective as well, what the actual markets look at, because no matter how good you are at the Elliott wave theory, not every analyst or even trader is going to be understanding the Elliott wave theory. In fact, it should be the other way around. You should be applying the Elliott wave theory for how the general markets are looking at it, and the turn to simple moving average is the best way to look at it. You talk about a channel rejection. Yeah, I think there could be a potential channel rejection since we did break a major protected low over here, right here. So if we do have this as a channeling, we do have the potential of already breaking a strong market structure. That I do agree on, and which is why I think that diagonal idea where we elongate it from a timing perspective, if we do break it, it becomes less relevant at a later stage with a deeper level at these levels over here, and then we move up. And that also aligns with the idea of this trend line being a major resistance going forward, right? So that's one. But hopefully that answered your question, because I don't see a major bear market happening. I think the $63,000 level is absolutely the final pinpoint on where the support may be, and I think we're going to distribute around those levels. And there's going to be a lot of sensitivity, plus or minus 20% with a lot of people between the bears and the bulls. Mr. Fish is asking, what percentage chance will you say the triangle for wave Y is versus a deeper correction? Now, that's a good question. So if we're really, so we did all the evidence, right? I'd say that this right now is still sitting around 70 to 80%, just due to the fact that we're still above market structure, right? For anything to happen, we validated more bullish validations up to this point. Why? Because we've validated it with the breaking of this previous high. We validated it with another previous high. We came down and retested it and broke back above it. So that's 3 validations from a bullish perspective. So with that being said, it has to be viewed as a corrective move to the downside, and that has to be utilized as a corrective structure now in terms of your overall bias, even though it may not have the best look. So in my opinion, I think that this has a little bit of a higher chance until market structure is broken. So if we do break this level over here, since we do have some ideas of how to transition better into a different scenario, the 89 or the $80,000 level is going to be the ultimate, well, not ultimate, but the most important immediate short-term support, in my opinion. So until we break 80,000, we can finally start talking about the diagonal scenario, which has a higher chance of playing out this way. But now you're transitioning into just a normal pullback scenario, which is a WXY to the downside. Hopefully that answered your question. How low can wave 2 of the intermediate degree would be? Wave 2? So you're talking about this one here, right? This idea is, again, it doesn't make sense to me right now until we get a 1, 2, 3, 4, 5, and ABC to the upside, and then we can talk about the severity of this depth. But I've already talked about why this is not a wave 4, and because of this as well, you have 2 inefficiencies back to back that doesn't make this scenario more deemed as the highest probable scenario. What's my take on the Bitcoin dominance? That is one request I will take. Oops, sorry, Korean. And this is one of those bigger pieces of evidence that I think the crypto market, this is why the crypto market still has a lot of juice left in the tank, is because we're ranging here, which means that we're working in a triangle as well. We've done the first major move to the downside as a ABC structure. We've had a wave X in the making, or a wave X as a triangle of some sort. And we should be expecting one more move to the downside where everyone flocks into altcoins. And that's also characteristic of what happens at the end of a bull market anyways, right? My expectation of a bull market ending is around May and June, right? Or July. So it's right into the expectation of how everything else is going to be playing out from an altcoin perspective. So this is the reason why also using some different context of different pieces of evidence of different assets, the Bitcoin dominance does give us a little bit of a clear picture from an market psychology perspective that I think using this is a very important thing. This is not resemblance of a wave 1-2 of any sort, in my opinion. This is definitely not an impulse to the upside. There's just no follow-up. I think this is more of a resemblance of a 3-wave structure, especially if this move was a 3-wave structure in itself as well. It's not deep enough for this to be a wave 1-2. Now, there is an argument that it can go up as a 3-wave structure here, where this can go up and retest the 70% and then move down, but that would be elongating the bull market even longer, and I don't want that to happen, and I don't think any of the bears want to believe that as well. So hopefully that answered the question. That's the reason why I think this has the higher scenario probability for the time being, which is the sideways structure here. And then if this happens, the Bitcoin dominance also works in a triangle of some sort, you know, with a margin of error, of course. Let's see. From what I've learned all these years, when a diagonal is easily visible to everyone, it often is a wave C or an ascending triangle, and people are confused. Yeah, that's the beauty of it. If you see a ending diagonal in play, then if you're seeing diminishing volume, then there's definitely a possibility of being an ending diagonal. But you have to make sure it's also, to some point, not forced as much as it is right now, where a lot of people are seeing as an ending diagonal in hindsight. So that's definitely, in my opinion, not likely the case. So in my opinion, I do think that this is just working as a possible potential triangle. Yo, Austin, what's going on, man? Link, dude, Yeah, I'll probably just go over one because I like Austin, man. This is the case. I was looking at the potential, this as a potential triangle range, but it's, dude, it's getting there, man. If we invalidate this, dude, it's bad news. So $9 or $10 is the level that you want to be looking for, man. If it doesn't hold $10, it's game over as well for a link. So I would say we got one more chance to move, attack the all-time high around 70 to 80 bucks. So yeah, ladies and gentlemen, I think I'm going to end it there. Hopefully that was helpful. I mean, I did cover a lot of things. I am still seeing a triangle playing out here. There's going to be a lot of hardships on the moves to the downside. There's a lot of hardships and celebrations onto the upside as well. So use this range to your advantage. And what does that mean? The advantage is going to be in the altcoins if this does play out, which means that the Bitcoin dominance is the biggest key factor here, or takeaway, that we don't have a completed move of a wave 1-2 to the downside. This would be just far too short to have a wave 1-2 here, and then we'll just move up and continue it. So yeah, I'm gonna end that on that note, and that's good news in that sense as well. I'm still bullish until proven otherwise, until we break market structure. Thank you very much, ladies and gentlemen. Have a fantastic rest of the week. And again, one more time, I'm gonna subscribe to the channel if you haven't already. Like the video if you haven't already, and we do offer a Patreon membership where I do go over every single wave count in between. I talk about all the micro time frames and my adjusted sentiment in real time. The Discord membership is that for you as well. The links are in the description below. Thank you very much. I'll see you guys, everyone, again. Have a fantastic rest of the week. Bye-bye.